farm-allied savings and credit cooperative societies across the country say the delay in re-establishing the defunct Cooperative Bank is partly responsible for the poor growth in access to credit.
In 2014-2015, the exemption was removed, meaning SACCOs are now paying 30% corporation tax on all the surplus generated by them, which is very high.
This concern has since been re-echoed by civil society actors who argue that exposing farmers to trade and consumer-related type of commercial costs on credit cannot support growth.
The government promised to establish the Cooperative Bank. To our dismay, the establishment of the Cooperative Bank is now under an unfunded priority under the Ministry of Trade.
Even then, farmer groups are uncomfortable with the anticipated cut down in allocation to the agricultural sector within the coming budget by 56.7 billion shillings, from 473.3 billion to 417 billion.
Look at the budget being slashed, and you look at the gap, for example, of extension services. We need more extension services, but you're cutting the funding. So how are you going to bridge that gap? Is OWC going to provide extension services? I don't think so, because they're not trained agronomists.
Meanwhile, the Uganda Cooperative Alliance insists that review of the sector legislation remains long overdue.
Needs to be revised so that it is brought up to date with the developments in the market area. And two, once it has been revised, for the government to provide sufficient resources to the Ministry of Trade, Industry and Cooperatives so that they can enforce compliance with that law by all cooperative actors.
Raina Ojan, NTV Business.